Hello investors, it's Zil from Equity Master bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. In today's video, I'm going to talk about 5 companies that stand to benefit from the shift to sodium-ion batteries. You see, the shift towards more sustainable and efficient energy storage solutions is becoming increasingly crucial as the world moves towards a greener future. Among the emerging technologies in the energy storage sector, sodium-ion batteries are garnering significant attention as a potential game changer. As the demand for electric vehicles and renewable energy systems grow, sodium-ion batteries could play a pivotal role in addressing some of the limitations of lithium-ion technology, such as resource scarcity and cost. Sodium-ion batteries offer a promising alternative to the widely used lithium-ion batteries, with advantages such as abundant and low-cost raw materials, environmental benefits, and improved safety. Several companies globally are leading the charge in developing and commercializing sodium-ion battery technology, positioning themselves to benefit from this anticipated shift. From energy giants to innovative startups, these companies are investing heavily in research and development to bring sodium-ion batteries to market. In this video, we will explore why sodium-ion batteries could be the future of energy storage and highlight 5 companies that stand to benefit from the shift towards this revolutionary technology. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of our way, let's get started. First on our list is KPIT Technologies. KPIT is a global technology company with software solutions that is working on mobility solutions to leapfrog towards autonomous, clean, smart and connected future. It has a 13,000 plus strong workforce across the globe, specializing in embedded software, AI and digital solutions. The company is a global partner to automotive and mobility ecosystem for making software-defined vehicles. It works as a leading independent software development and integration partner specializing in embedded software, AI, and digital solutions. KPIT derives its revenues from 3 business segments, that is 62% from feature development and integration segment, 19% from architecture and middleware consulting, and the balance 19% from cloud-based connected services. The company is also geographically well diversified with 31% revenues coming in from the US, 52% from Europe and the balance 17% from Asia. KPIT's revenues are heavily concentrated from the passenger vehicle segment, with the PVs contributing 77% of the revenues, while 23% revenues are derived from commercial vehicles. The company introduced the first sodium-ion battery in the country in December 2023 for trials. The key feature of the battery are extended lifespan with 80% capacity retention, faster charging than common lithium batteries, and energy density ranging from 100 to 170 watt-hours per kilogram. Coming to the financials, KPIT Tech witnessed a growth of 23.5% for the half year ended September 2024. EBITDA growth for the first half year came in at 30%, with margins coming in at 20.8% in first half of fiscal year 25 versus 19.8% in first half of fiscal year 24. Going ahead, the management has guided for 18 to 22% revenue growth in constant currency, with EBITDA margins to sustain above 20.5%. The stock is up by 9.7% in the last 1 month. However, returns over the past 1 year are at a minus 6%. Next on the list is Tata Chemicals. Incorporated in 1939, Tata Chemicals Limited manufactures and exports basic chemistry and specialty products. The company has a strong market share in the global soda ash industry, with presence in India, North America, Europe and Africa, as well as diversified products profile divided into basic chemistry products and specialty products. Tata Chemicals is third largest soda ash producer globally, with over 2/3 of its capacity being natural soda ash, translating into cost-effective production. The company is also the 6th largest producer of sodium bicarbonate in the world and one of the leading agri-services and crop protection chemical companies in India. It operates in two business segments, that is the basic chemistry segment, which is soda ash, soda bicarbonate, cement, salt, marine chemicals, etc., and the specialty chemical segment, which is agrosciences, nutritional sciences, and material sciences. Tata Chemicals has production units in Gujarat, Andhra Pradesh, Tamil Nadu, and Maharashtra with an installed soda ash capacity of 1.1 million tons per annum, bicarb capacity of 0.15 million tons per annum, and salt capacity of 1.6 million tons per annum. The US unit has an installed soda ash capacity of 2.5 million tons per annum. UK unit has the following capacities: soda ash of 0.4 million tons per annum, bicarb of 0.13 million tons per annum, and salt 0.4 million tons per annum. The company derives 77% of its revenues from the basic chemistry segment and balance 23% from specialty segment. Geographically, India contributes 27% of its revenues, the US contributes 34%, 15% comes from the UK, 4% from Kenya, and the balance 20% from its subsidiary Rallis India. Tata Chemicals is increasingly involved in EV chemicals following the Tata Group's $1.6 billion deal for an EV battery plant. Soda ash is needed to produce lithium carbonate, crucial for lithium-ion and other batteries. The company can easily pivot to manufacturing raw material required for sodium-ion batteries. Coming to the financials, Tata Chemicals reported a 5.2% decline in its consolidated revenues for the first half of fiscal year 25. EBITDA also fell 35.9% on the back of declining EBITDA margins, which came in at 15.3% for the first half of fiscal year 25 versus 22.7% for the first half of fiscal year 24. Going ahead, the management says that the demand scenario remains balanced, thereby anticipating steady operations in the second half of FY25, following disruptions in the first half. The stock is down 1.3% in the last month and down 2% over the past 1 year on the back of muted operational performance. Third on the list is HEG. HEG is a leading manufacturer and exporter of graphite electrodes in India. It operates the largest single-site integrated graphite electrode plant in the world. The company offers various grades of graphite electrodes such as ultra-high power, and regular power electrodes of various different lengths and diameters. The sector is a high-tech with high entry barriers, and HEG was the last new entrant in the world in 1976. Its expertise lies in graphite electrodes, power division, and carbon specialty products. HEG derives 31% of its revenues from India and the balance 69% from exports. The company exports 65 to 70% of its production to 35 countries. The company has an integrated manufacturing facility near Bhopal, Madhya Pradesh, producing high power and ultra-high power electrodes. It also owns power generation assets of 80 megawatt. The manufacturing capacity is 100,000 tons per annum with a capacity utilization of 89%. HEG has a diversified customer base, supplying a substantial portion of its production to the top 20 steel companies worldwide. Coming to the financials, the company reported a fall in the revenue to the tune of 11.4% for the half year ended September 2024. EBITDA also fell for the half year by 46.5%, with margins coming in at 11.9% in first half of fiscal year 25 versus 19.7% in the first half of fiscal year 24. Going ahead, the management anticipates continued near-term margin pressure due to the current demand scenario, but remains optimistic for a recovery in the second half of 2025. The stock is up 27.9% in the last month and up 48% over the past 1 year on the back of expected improvement in financial performance. Next on the list is Gujarat Fluorochemicals. Incorporated in 2018, Gujarat Fluorochemicals Limited, earlier known as Inox Fluorochemicals Limited, is a part of the Inox group of companies and has been demerged into a separate legal entity. The company is one of the leading producers of fluoropolymers, fluorospecialties, chemicals and refrigerants in India. It is one of the top 5 global players in the fluoropolymers market with exports to Europe, the Americas, Japan and Asia. The company is the only PTFE fluoropolymer manufacturer in India and is a major supplier of fluoropolymers to Europe and the US. GFCL holds domain expertise in 4 major product verticals: fluoropolymers, fluorospecialties, refrigerants, and chemicals. In Q4 of financial year 24, GFCL EV, a wholly owned subsidiary of GFCL, announced the commissioning of the initial phase of its integrated battery materials manufacturing facility. GFCL's EV product portfolio caters to 40% value of the lithium phosphate battery cost. It will manufacture electrolytes, binders, cathode active materials. The company has 2 manufacturing complexes in Dahej for the fluoropolymers and chemicals, another one in Ranjit Nagar for fluorospecialties, and one in Morocco for fluorspar mining and beneficiation. The company has offices and warehouses in Europe and USA too. GFCL derives 40% of its revenues from domestic markets and the balance 60% from exports, consisting of Europe at 21%, the US at 26%, and the rest of the world at 12%. Coming to the financials, GFCL reported a 9.6% jump in its consolidated revenues for the first half of fiscal year 25. EBITDA fell 9.8% on the back of a small dip in EBITDA margins, which came in at 24.3% for the first half of fiscal year 25 versus 25% for the first half of fiscal year 24. Going ahead, the management is expecting substantial improvement in operational performance from Q4 of FY25 onward, despite the first half challenges due to the European slowdown and adverse business cycles. Gujarat Fluorochemicals Limited share price is up by 21% in the past 1 year on the back stable financial performance and entry into new business segments. Also, the stock is up 12.3% in the past 1 month. Last one on the list is Himadri. Himadri Specialty Chemical Limited is primarily engaged in the manufacturing of carbon materials and chemicals. It is the #1 coal pitch manufacturer in India and is the only company to manufacture advanced carbon materials in India. The company is a key player across various product segments, including battery materials, coal tar pitch, carbon black, naphthalene, refined naphthalene, SNF, and specialty oils. HSCL serves a diverse range of industries such as lithium-ion batteries, paints, plastics, tires, aluminium, graphite electrodes, agrochemical, defense, and construction chemicals. The company derives 81% of its revenues from the Indian market and balance 19% from exports market. HSCL exports to 54 countries including Germany, Indonesia, Russia, UAE, Egypt, UK, etc. The company operates 7 manufacturing facilities in India and 1 unit in China, with an installed capacity of coal tar distillation at 0.5 million tons per annum, carbon black at 0.12 million tons per annum, and specialty carbon black at 60,000 million tons per annum. HSCL's clientele include the likes of Seat, Vedanta, Apollo Tyres, Pidilite, National Aluminium Company, Bridgestone, MRF Tires, Graphite India, etc. Coming to the financials, HSCL Limited reported a growth in revenue to the tune of 19.5% for the half year ended September 2024. EBITDA also grew for the half year by 37.2%, with margins coming in at 17.1% in first half of fiscal year 25 versus 14.9% in first half of fiscal year 24. Going ahead, the management is optimistic about the future on the back of lithium-ion battery demand growing 33% annually and battery energy storage demand also poised to grow multifold. The share price of Himadri Specialty Chemicals Limited is up 80% over the last 1 year on the back of robust operational performance. The stock is also up 12.6% in the last 1 month. So there you go. These were the companies that are progressing well as the shift towards sodium-ion battery happens. Sodium-ion batteries represent a promising and potentially transformative shift in energy storage technology. With advantages such as abundant raw material, lower cost, and improved safety compared to lithium-ion batteries, it's poised to address some of the key challenges in the growing electric vehicle and renewable energy markets. Several companies are leading the charge in developing and commercializing sodium-ion battery technology, each positioning themselves to benefit from this emerging trend. As these companies invest in research and development, sodium-ion batteries could shape a sustainable energy future, making it an exciting area to watch in the coming years. However, investors should remain vigilant about these companies, conduct thorough fundamental research, and keep abreast of latest market trends to ensure they make informed decisions. Also, keep a close eye on the corporate governance of these firms. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. Have a profitable day and happy investing.